Hey everybody, this is Jim at SP500chart.com. It is a little after 2 o'clock on Sunday afternoon, December 1st, 2013, and we're going to take a look at what took place in the S&P during our short Thanksgiving week, and we're going to take a quick look also at what took place in the short session on Friday. And before we do that, just need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. We're starting out here looking at a daily chart because I want us to kind of take a look at sort of the overview of what's been going on for the last, almost 2 years, not quite. And mostly you can see that since November of last year, we have managed to stay above this rising support line with the sole exception of a few days in early October. But other than that, we've stayed over this line. Additionally, let me get rid of that Bollinger Band. Additionally, we have identified over the past year and a half or so a number of inverted head and shoulders patterns and a few head and shoulders tops. But frankly, the way this market has been moving up, there have been fewer tops and more consolidation kind of patterns along the way. We are currently over 1,800. We are over just about every, well, let's put it this way. We are over all of the major support lines. We are underneath some, what I would describe as minor support lines that have sort of broken, but I think we need to evaluate what is going on before we say, yeah, that's a busted trend. And we've done that over the past couple of weeks. We've seen a couple of channels break, but the channels have been rising up at such a strong rate of ascent that break does not come as a surprise, and it is proven out in a number of cases to be just a breather. Much the same ways we've seen, for example, in late 2012. We come up, then we take a breath. We come up, take a breath. Come up, take a breath. Then we see a really strong move up. So anyway, that's just kind of, I'm showing you this line in context. At the same time, this line and this line are next to what I believe would be important resistance lines, and both of these are significantly higher than where the market is currently trading. This red line is currently at about the 1860 level, and this purple line is more like 1875s to 1880. I think I said that right. This one would be around 1860, 1875, 1880, maybe the mid-1860s. We'll take a look at those a little bit closer. But that's the broad overview that now we're going to zoom in and take a look in more detail. All right, on a 30-minute chart, you can see that this past week we redefined what looks to be a rising channel. This used to be the old channel support line, but now I'm changing that to this because this was a bottom and this was a bottom. These are our two most recent bottoms. I believe that makes sense. Additionally, this channel comes after about 2.5, almost 3 weeks of sideways action where we had 1774 as a line of resistance that once it broke up, remember we had this inverted head and shoulders here with a truncated right shoulder that had a pattern of approximately 1782. We broke out, made that target exactly, then started to sell back, found another bottom, and now we've started to go back up. Okay, so this, I believe, is an important line for the intermediate trend. Our really important lines are still significantly further down. I believe this line right here could end up being important should we approach it. And certainly this channel line that we were looking at that's been operating since last November, more than a year, this is certainly important. And up here you can see our resistance lines that I just talked about. This one currently around 1860, this one around 1870, but rising up at a clip to where if we were to touch it, we would likely be touching it significantly down the road and probably closer to around 1900 if the market has the steam to do that. Let's zoom in just a little bit more. Now looking at a 10-minute chart, and this is where we start to see a little bit more of what took place over the last week. Like I said, it was a short week, so we only have 4 days of trading, well, 4.5 days to be exact, and it all took place in this little window right here. Let me edit this just a second. We're not going to fill it. We're just going to let we'll just put a red line around it. There's our trading week. Remember, Friday was half a day. I suspect the folks at Free Stock Charts will fix that and get rid of that half day sometime, hopefully before the open tomorrow. Interesting to note, we had this little consolidation sideways pattern, and I mentioned that it was kind of hard to determine where our resistance line in this was. Would it be here or would it be someplace else? And depending upon where you draw it, you could come up with slightly different targets. For example, you might say, well, here's our line, and if that's the case, then we would have a target of about 1813, which was met. But if you say, no, it's more this, then we would have a target that is more 1815, and that has not been met. So that's why I had this little target range. On Friday, we got into that range. So we could maybe say that this consolidation has done its thing, and we can say that little inverted head and shoulders right back here that was only 2.5 days in forming, it did its thing. Once we got up to about 1810. So right now we don't have any patterns per se that we're looking at, and we can say to ourselves with any degree of objective clarity that we are expecting a move to 1830, 1835, 1860. I can't say that. I can say that we are still inside of what appears to be a decently forming channel. So if we come down and we tag this lower line and we get a bounce, then I would expect a bounce. You'll notice that the action that's taken place inside of this channel so far has been one touch on the bottom. We came up, got some weakness, rallied for a touch on the top, came back to the bottom, started to come up. We're seeing a little bit of weakness. Let's see, just curious, if this market has the strength to come back up and tag this upper resistance line. Again, there's no pattern that says it should do that, but we still have this channel. Now, as far as the week goes last week, it was a holiday week. I really wasn't too keyed in on anything really taking place. We did see this rising support line break right here, but the way it broke, it sort of did so in suspicious fashion. That led me to redraw this bottom line, which just turns out, as luck would have it, has a reasonably formed counterpart up here as a resistance line. Now, I'm going to throw one more line on this chart because we need to also understand the potential bearish case. And that would be that we could be setting up a rising wedge. Okay, and I think the way we would be on the alert for that would be to watch this line right here, which I'm going to make red. If we were to come up to this point around the mid to high 1820s and then fall back down, and if we were to stay between this line and this line, then I would watch this bottom line like a hawk, because the rising wedge carries with it an inbuilt, or I guess the right word would be built in, a built-in bearish culmination once this lower line breaks. Hasn't broken yet. And if it does break, then this is not a major kind of a reversal pattern when it's this size. But it could be showing some innate weakness in the market. So let's do this. Let's keep the channel in mind, resistance, support, and also keep the possibility of a rising wedge in mind. Same support line, but this would be our resistance. So guys, as far as the week went, we pretty much ended the week where we started it. We stayed above 1800, which I believe is somewhat bullish. And I think at least in the short term, excuse me, the idea that when we broke this line, it was not to reverse, but more likely just to get a little steam. But let's see where that steam might take us. If we can get over this line right here, then I would look for a tag of this top line. But if this line serves as resistance and we get turned back down, I would start to watch this bottom line very, very carefully. Finally, I just want to say one more thing. To those of you who are our subscribers and to those who are not, I'm going to be going up on the subscription rates about 25% starting January 1st, 2014. If you are already a subscriber, your rates will not change. If you subscribe between now and the end of the year, your rate that you get, which is the same rate, which is the current lower rate, will be good as long as your account remains active. So I just want to give you kind of fair warning like they do at the auctions. You know, fair warning. That change will be made on January 1st, 2014. So guys, there's your video and weekly review for the week ending the week of Thanksgiving, November of 2013. Thank you for watching. I really hope you get something out of this. Thank you for your support. Thank you for your time. Take care.